On ET now, on a day when recommendations of a committee led by him for gas pricing formula have been accepted by the cabinet. It was widely expected that the Reserve Bank of India's MPC would increase repo rate by another 25 basis points. But the RBI has surprised experts by not increasing its key lending rate and keeping it unchanged at 6.5% after increasing rates 6 consecutive times. So, is this a pause or is this a pivot? This, of course, comes as a breather for borrowers who've seen their monthly installments and bank loan tenures go up after the 6 previous hikes. A hike in the key lending rate, though, seems to be not completely out of the books for now. The RBI Governor Shaktikanta Das specifically called the decision as a pause and not a pivot, as the RBI waits to see how the previous rate hikes play out in the economy. So, what is the significance of this unscheduled pause? To speak more on this, I'm joined first by ET Now's consulting editor, Maithili Bhursumat.
Well, yes, the Reserve Bank of India Governor Dr. Shaktikanta Das as well as the MPC did surprise the market somewhat because the markets had factored in a 25 basis point hike in the repo rate. Instead, the MPC opted to keep rates unchanged. So the repo rate was unchanged, quite contrary to what the market had expected. Very few economists, in fact, had called for a pause. But clearly the governor has, as he explained, taken the factor of financial stability also into consideration, given the kind of bank crisis that we've seen in the US as well as Europe. So that perhaps was a factor which played a part in the MPC opting to keep rates unchanged. As far as the stance was concerned, it also remained focused on withdrawal of accommodation because the governor argued that the policy is still accommodative. As far as GDP estimates as well as inflation estimates for the year are concerned, remember this is the first MPC meet in the new fiscal. The GDP estimate has been moved up marginally from 6.4 to 6.5 and inflation has come down from 5.3 to 5.2. The MPC and the governor have made very ambitious projections of the inflation, but this is mainly because inflation in the comparable period of the first quarter of the last fiscal was astronomically high. April inflation in 2022 was 7.8%. So the price impact, the base impact will be much more pronounced. It is not really as if inflation is coming down or the rate of increases in prices has come down, but simply because the way in which we calculate inflation compared it to the previous quarter in the last fiscal, and that was a quarter when inflation was very, very high. So overall price concerns remain, but for the moment the MPC and the RBI have opted to keep rates unchanged. This was a unanimous decision. We'll have to see how things pan out, because clearly what has happened is that the RBI had delayed taking action, and once you delay taking action, you cannot make up for lost time by keeping rates higher for longer. So let us see whether they have called right, because ultimately monetary policy, one must remember, is a judgment call. Let us hope for our sakes that the MPC has called right this time.
If I have to characterize today's monetary policy in just one line, I would say as follows. It's a pause, not a pivot. Number two, there has been an effective rate increase of 290 basis points over the last 1 year, including the SDF 40 basis points rate increase. And this 290 basis points increase, in fact, has translated to a monetary policy transmission by way of increase in the overnight call rates.
All right, so it's a pause, not a pivot. But has the pivot come at the right point? It's very interesting because just a fortnight after the Fed increased interest rates once again, the RBI has decided to go in a different direction. Are we decoupling? Are we marching to our own beat? What's really going on? To speak more on this, Aditi Nayar is with me right now from ICRA. I'm speaking with Kaushik Das of Deutsche Bank and Madan Sabnavis of Bank of Baroda. Welcome to all of you. Thank you so much for speaking with us on the show. Aditi, let me begin with your take. Were you pleasantly surprised?
Definitely surprised, and I will say pleasantly, because the notion that we had was that we've had these two prints which are above 6%, and that's going to convince a narrow majority of the MPC to go in for another rate hike. But I agree that 250 basis points of rate increases, simply if you look at the repo rate itself, that's a lot. And it's good to sort of take a pause and take a breather and look at what is the impact of the transmission going ahead. Having said that, inflation risks are clearly to the upside between an El Nino, if it does materialize, and crude oil prices, which may or may not translate eventually into higher pump prices. Both of these are only going to add an upside to the inflation risks. And the change in the stance, the wording of the second half of the stance does make it seem as if the focus is trying to be sharpened on coming to the 4% inflation target and not just remaining below 6%. So, while we welcome the pause, I don't think it's a full stop. So let's see how long the pause lasts and, whether we do end up with an extended pause over the next few policies.
Comma, then a full stop, another way of putting it. Madan Sabnavis, is the timing and the reasoning sounding just about right to you, waiting to see how the last 6 hikes have percolated into the system, and also basing this on India's essential resilience and domestic demand?
The way I look at it, Tamanna, is that ideally I would have preferred to go in for a rate hike, given the inflation potential which is there. And also the fact that once we take a pause, I think increasing the rate subsequently could be a bit odd. It will have to be strongly justified by saying that it's just not that inflation is going up, but it's going to keep going up, which will probably not be the case. So I think there was a strong case for increasing the rates. And against this background, I think it's been a very pleasant surprise for the markets at least. And the indication given is that, this is not to say that we're going to pivot and rates are going to come down, but and he said that the markets have to be ready for further rate hikes in case the circumstances demand. But I think that is the regular language which is used, saying that everything is data dependent. So it's a judgment call, as what Maithili had mentioned earlier, and I think it could have gone either ways. And I think this has definitely been, it's come probably a policy earlier. I would have thought that this pause would have come maybe in the June agenda. So I think it's come a bit early, which is probably good. At least it signals that, because I don't think inflation is going to go up from now onwards, at least in the next couple of months. If at all there's going to be any root shock on the price front, it will be because of El Nino, drought, agricultural production coming down. That will be more in case of September, October. Until then, I think things will be fairly stable. So I think the judgment call did show that at least 6 of the members, all the members felt that this was a time to take a pause. So I think that was a good surprise for the market.
We also have to see the context of it, and of course the monetary policy in India is depending on what's happening with us, but it also keeps in mind what's happening in the world. Kaushik Das, the fact that it comes after Silicon Valley Bank, it comes after the entire global banking crisis, where in a sense in that narrative the Fed became the villain for their interest rate hikes. One way of looking at it was that the big bad Fed hiked interest rates to such an extent that global banking has been shaken up. Do you think a leaf was taken out of that book as well?
So, Tamanna, thanks for inviting me. Obviously, financial stability risks globally, that played a very important role in informing the MPC's decision to pause in the April policy. I think this is the perfect time. I would have, kind of thought that this is, if you have to pause, this is the right time. It could have gone either ways. You could give equal justification why RBI should have paused today if somebody was arguing for a rate hike. So the thing is that their pause is also because of the fact that globally things are very uncertain. And if you hike so aggressively in a very short span of time, 300 basis points of interest rates have gone up in the money market, you can afford to take a breather and see how things are going. Nothing stops RBI from hiking again if required. RBI has said that, and they have not given away that optionality. So they've said that if inflation surprises again, if they need to, they'll go and hike again. So they're not telling you that this is the end. In fact, Governor Das said that the job is not done yet. But the point is that, going forward, what will happen is, as Maithili pointed out, that the base effect becomes very favorable for inflation. And we would see inflation averaging about 5% in April, June, and probably around 5.4, 5.5 in July, September. So if RBI has not hiked interest rates when inflation was at 650 or 644 in January and February, it's difficult for RBI to hike, or you would not find enough justification for RBI to hike further if inflation is within 5.5% band. And also remember that monetary policy works with a lot of lag, and you have to give it time for it to impact the real economy. So what decision you take today will start impacting the real economy properly after 2-3 quarters. So RBI has done a lot of rate hikes that is still yet to play its impact on the real economy. So this was a perfect time for RBI to pause and kind of check how the transmission is playing out.
In your view, of course, Kaushik Das, it's a pause, not a pivot. But in your view, has this cycle of interest rate hikes peaked as far as India is concerned? Because you seem to be making the argument that it will be more and more difficult to resume that rate hike cycle, looking at the data that is to come.
So how do you decide that? So one way to decide that is what is the positive real interest rate that you want to target over a forward-looking basis. So RBI has given a forecast of January-March 24. Inflation averaging at 5.2%. Earlier, that forecast was 5.6. RBI has got it down to 5.2. So if that forecast turns out to be correct, we'll only know in the later. But suppose inflation is going on track to achieve 5.2 in January-March 24, then policy rate at 6.5 at this stage means that your real interest rate is positive by 130 basis points, more than 100 basis points. So from that perspective, you can say that 650 probably is the terminal repo rate at this juncture if inflation doesn't surprise to the upside. And if you remember, Governor Das started cutting rates in February 2019, and that time RBI started cutting rates from 650. So from 650 it came down to 4 on the repo rate because of COVID, and from 4 it has gone back to 650. So we think this is more or less the right level for India. And the Fed also seems to be more or less done, maybe one more rate hike in May. Beyond that, we don't expect the Fed to hike. So from that standpoint, it looks like India's rate hike cycle has peaked.
Aditi, 650 is the apt rate or 7? There seems to be, different views on it as well. And do you think we'll see this entire cycle pick up? Or for now, we can say, yes, it is a pause and will hold for some time. That's the direction one expects the Fed to go in as well. We've just been a little earlier, perhaps.
7 is far too high in my view. 650 may well turn out to be appropriate if, as Kaushik said, inflation looks like it's evolving in line with the projections that the MPC has made for the next 3 to 4 quarters. So unless there is a negative surprise, inflation turns out to be much higher than what the MPC has projected for each of the next few quarters, maybe the pause can continue for an extended period of time. But it's at this point in time, today, if you ask me to take a call, what will happen in the next policy, I'm going to say it's going to be totally data dependent.
No one's willing to risk sort of sticking their neck out at this point and, seeing what happens next. Matan, just a bit on the narrative of India and the Indian Central Bank not really getting tied down with what the world is doing it, or are we at the start of this pause cycle as far as global banks, central banks are concerned?
Actually, I think this narrative has been changing quite regularly. I remember a couple of policies back, I think when the policy was announced, it was mentioned very clearly that there were 3 major shock factors which were there, which we couldn't ignore. And one of them was supposed to be what the Federal Reserve is doing. But now I think the narrative has changed. We're saying, look, what the Federal Reserve does pertains to the US, and India has always been driven by what happens based on domestic considerations. No, in fact, I would say that, this is just wild thinking, that if we had to pause this time, we could have also paused last time, because I think this is the first time the policy is actually saying that we need to look at forward-looking inflation and then look at a real interest rate. So those projections haven't really changed too much. Maybe marginally 5.6 has come down to 5.2 for the 4th quarter. We could have taken a pause even last time. So I think the way I look at the narrative is that depending upon the evolving conditions, the RBI is doing regular fine-tuning, which I think is the right way to do it. But we should not be sticking to any particular dogma, because evolving conditions, the RBI is doing regular fine-tuning, which I think is the right way to do it. But we should not be sticking to any particular dogma, because what we are calling a dogma today may not really hold tomorrow. let's just assume that crude oil prices is not going to affect Indian inflation for sure because the retail prices are controlled largely. Maybe LPG goes up, but pump prices don't change. But let's assume that in US, where there's more transmission which takes place and inflation again crosses the 6% level, the Federal Reserve goes with another 75 basis points increase in interest rates. Will we still continue with a pause? I think the narrative will have to change depending upon the evolving conditions. So therefore, I think what happens globally is something which is definitely considered, but may not be the overwhelming factors which is used when you take a decision.
So it's relief for now, pause for now, but can't really expect to say that this is start of a new sort of a cycle. We'll have to wait and watch. We live in uncertain times, and a recognition of that, in a sense, has come from the Reserve Bank of India today. Thank you so much to all of you for joining us on the conversation.